The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, Basil Chapman, Tiger Technicians Hour. This is the shortest day of the year. If you're talking about going short the market, shortest day of the year, yes. We are looking at a situation here, where the parties involved are right in this negotiation area. And as I said to my subscribers this morning, let me see how I put it. I can't remember right now. I remember thinking about it quite carefully and then coming up with the comments. I always make comments. So let's see. All right, let me move it over. I'll show you what it is. There it is. If you're looking at Tiger TV, you'll see it right. Oh, of course, I've got to get my droid and got it all out. Okay, doesn't matter. So, first of all, thank you to Steve for a great first hour. Then together, Tom and Steve, just a wonderful show. And then I come in here, do the very best I can. Straight off from each and every Larry Pesavento. And then we go on Wednesday today. So we go to Daryl Martin. Then we go to, if he's well, we will go to Dave White. Then we go to Ken Shreve, and we come right back here, 4 to 6. You've got your Tom O'Brien, the leader of the pack, coming right in there to wrap it up and give his views on everything that's going on in the market. Now, don't forget, last day to get your Tiger dollars. Fantastic way to get 25% bonus. What more could you want? 25%, just like that. Not only do you get the 25%, go to the front page of TFN, you'll be helping the Salvation Army because there will be a tax deduction of between 5 and 10% that you personally will be getting. So it's just absolutely a win-win-win situation. But to make it a win-win situation, 4 wins, check out the CD introducing the ChapmanWave methodology CD that's for sale right there on the front page of TFN. I can find it right here. Before I go to my overview, right there, you go to half off Basil CD. It isn't just half off Basil CD. What it is, you get half off. Whoops, wrong one. There it is. Save 50% on Basil CD book. It's a CD book. It's like a PowerPoint presentation, 470 slides, different chapters. The charts I'm going to talk about today represent exactly what we're looking at and how I use the ChapmanWave methodology to have 6 winners in my opening call. You get my opening call free for a month if you buy the CD. In other words, I'm giving you $4 out of it. That's the difference between buying half-price CD, getting my opening call for free. I'm giving you $4. I love that because it's my way. I'm an advocate of the ChapmanWave. You've seen it here for 9 years. You've seen me doing the ChapmanWave methodology. It's been refined over a period of time. The CD is absolutely the core of everything. One of the few things that's missing there is the moving averages. Well, I talk about them on the show all the time. And there is a webinar on the moving averages. But I absolutely talk about the moving averages when you look at the CD closely, and you look at, where is this I showed right here today, this slide right there. This is slide number 54 out of 476. The SPX index showed all these techniques, and I showed the MACD, the stochastic, how you use it, why you use it, what's important. I've got a little circle there, dash circle, and in this particular slide, it goes to a peak F-top. You remember the song? The buy at the low and sell at the high. The market goes up, the market goes down. It's supposed to buy at the low and sell at the high. But you know what we tend to do? We buy at the high and we sell at the low. So now you use the ChapmanWave. A ChapmanWave is what you need. You buy with the Stoke and the MACD. You follow the price and wait for a peak. Higher highs is what you seek. So all you're looking for is everything to be in coexistence so that the stochastic's moving up, the MACD's moving up, the price is moving up. The wave goes to A and then to B, even the anticipated C and D. There it is. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. In other words, if you are long, you can take off part of your position at D and say, oops, that's when my risk is greatest. I don't have to. I could raise my stop, but I may as well take something off and then raise the stop on the rest. Let me get taken out. But if it goes above D, it goes to an E. Could recycle, but in the meantime, we look at this and suddenly it goes to E and F. A bell rings so loud it can make you deaf. What is the bell? Well, look at that failure in the stochastic. Look at the candle at the top. Look at the MACD failing. There are just so many hints that you can look for. So what you're going to do, which way to go? You sell at the high and you buy at the low. So that's a little song. I didn't expect to do that. Oh, there it is in the den. Someone's got the violin playing there, sawing on the violin. So let's go back to the story here. So check it out, front page, a win-win situation. It's worth it. I can tell you right now. Look at this. The Dow, the chart I was going to show you is right here. This one right here. In the overview section of my opening call, and I do very comprehensive. You can imagine how much time it takes. Look, I have to type that all in. In TradeStation, you can't type and just correct. If you make a mistake, the whole sentence has to be redone. I need to choose the colors. I've got yellow for this black background. I've got blue for the white background. Great. My engineer says stick to the clarinet. No, I wasn't trying to sing. I wasn't giving it my very best. This was just to go through the methodology involved as a ChapmanWave song. Look at this. You've got the cup formation. That's just be careful. There's strong resistance right there. This is a 120-minute Dow chart. The VIX index went to a cup formation and failed below the 17.53 last peak D and E high. It went to a peak D. It plummeted down. It's a very strong move in the both the TRIN and the VIX this morning. The VIX is down at 16.46. Market actually shouldn't be down 6. The Dow is down 6 at 13,334. The S&P is down 134 at 1445. The comp index is up 4. That's that old Apple helping again, I bet. Apple is helping. Yeah, Apple's at 532.63. We were fortunate enough to get it in the 506s area. Now look at this. You've got the comp index is at 1442. Gold is up to having had another big smash. I'm not interested in looking at the long side of gold. Maybe for a trade because it's close to the double bottom. Oh no, it's broken. The weekly GLD has gone below the left side low, so it could bounce here, but I'm watching it closely. Silver's down 31 cents, and copper is now just down 5 at 360. I don't like that at all. And bonds are up 24.30 seconds. So now look at this. We go back to this quadrant with the 5 different views. The TRIN closed at 0.48. It's right now at 1.37. That's saying there's a lot of selling going on, but yet you haven't seen the selling pressure represented by a sharp. The Dow should be down about 90 to 110. The S&P should be down 12 based on these figures. So that, in a sense, is positive, saying, you know what? There's a stork leg formation, the pattern that says just keep going up. Every single sell mode, every single sell is met by buyers, regardless of the news. And the Dow is in leg F/B, and the S&P is in leg E/A. And what I said is, how unusual to see the type of potentially powerful fiscal cliff market moving overhang as a political entity, and the market refuses to dive. The bears are hanging on to every word, and so far at least nothing. Simultaneously, we know that the selling, when it comes, not if, there will be a selling spree at some point. Could be quite sharp, severe, and broad. But the euro is still very strong. Gold was pummeled. Could bounce here. Bonds have been creamed, and the TLT is at exactly the left side support, so it could have a nice bounce. The dollar is getting near to the left-hand support. And have you seen the airline index? So I want to go through a bunch of things. I had questions from email questions. When I look at Netflix, Hot, AXP, and I wanted to look at the airline index, but we've got a caller online right now. We've got Larry and Shay. Cayenne, Wyoming. Hi, Larry. How are you?
Yeah. Hi, Basil. Glad you could take my call.
Oh, it's my pleasure.
I'm calling about, on the weekly chart, Netflix. And
yes.
I'm having difficulties analyzing it. I realize it's I think you'd agree it's in a wave D up on the weekly. And It happens to be at a 1.27 expansion today, and it's riding. I use Bollinger Band in the background. It's on the 2 deviation. It's at the extreme there. Volume shrinking, and on the daily, the trend lines show that it's just riding that upper line, and the lower line that I drew parallel is down at 79, almost 80. So I just have no clue if this would be a good short or not.
Do you have a position, or you are just looking at Netflix to short?
Well, unfortunately, yeah. I didn't like the MACD. I on the daily I have a wave D count, and even though I wasn't crazy about the MACD and the I got a newsletter recommendation to go short, and I something happened. I didn't get out, and now I'm stuck in it. And it looks like it's maturing, but it doesn't want to come down even on shrinking volume. So I'm just curious what your take is on it.
Okay, that's a great question, because I have the exact opposite here. I have someone, Chris, who actually has Netflix, bought it somewhere in the 60s, I think, and it's now trading at 97.57. It's NFLX Netflix. Now, this is really a fascinating situation, and I'll explain why. Well, first of all, I'm a little concerned about you're still holding your short position. So, in other words, you were about to put in a buy stop, kind of bounced over it, and now you're just stuck because you're not sure what to do.
I'm stuck. I didn't put the stop in. I wasn't sure where to put it in. I had some confusion on the original order, and I don't have a stop in, and I'm watching it. I'm hoping now that at the 1.27 expansion it runs in. I didn't calculate the confluence from the on the weekly from the January high. I just know that from the July high it's at 1.27. I don't know what the confluence is.
So let me do this. Let me just explain what I'm looking at. First of all, right in this particular season, my suspicion is that Netflix is probably not the short. Maybe in early January it'll be a short. But right now in the holiday season, I mean, people, this is exactly what they want to do. Netflix, maybe give it as a gift. There's a whole bunch of things that are going towards the chart, but that's fundamental. Let me look at the technical picture. First of all, thank you for saying that it's in leg D. I had done this real quickly the other day because I'm migrating a lot of charts from the black to the white background charts. It just seems better. People have said nice if they can print them out, etc. I happen to still see the black background chart in a split second. I can tell 1 penny difference from a top or from a peak to a trough, but that's not an issue. I'm getting real used to this. In the weekly, let's go. First of all, I don't have to tell you that the monthly has this incredible move from round about 17 back in 2009 to 304.79 peak E-top in July of 2011, and then it plummets in 2 waves down. It goes all the way to where? To 52.81, right on the 200-period exponential moving average. When a stock tells me from its history that it loves a certain moving average, I respect that. And you're correct, it's in leg D in the weekly. We'll be right back with Larry straight after these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, Dow's down 20, S&P's down 282. One of the reasons why in my opening call this morning, although we have 6 long positions, and I'd said yesterday's close was probably the peak for the portfolio, I'm anticipating that there's going to be some choppy action, more to the downside. We bought some insurance, and we bought insurance only because, not that I expect a sharp move down right now. I think that's going to come a little later, but I'm expecting enough choppiness that I want to protect what we've got. And right now I'm treating it as protection. I don't believe in saying that all my positions are long, but we are short, and that's that I'm negative the market, but I would rather my portfolio reflect the bias that I have right now, and that reflects, at least for now, the positive bias. I don't know if you even saw the IYT and the airline index. I'll look at that in a short while. I want to finish here with Larry, because Larry is in a short position in Netflix. I spent a little time on the wave count on this. I actually did write in the correct one, then I changed it for some reason. The initial low was exactly this beautiful, like Apple had this dreaded H pattern in my book, CD introducing the ChapmanWave methodology, on sale right now. There's a pattern that I call, it's the double bottom. It looks like a lowercase h. I call it the dreaded H pattern. It's chapter 17. This was very successful in going from the low of 53.05 on the 26th of September to peak A on the 27th, peak B on the on the 8th at 74.23, and then peak C at 84.95 on the 31st of October. And then there was that rectangle formation that I speak about so often, that within it you can actually get a beautiful buy signal that takes you to a peak D at just below or just above the previous high. Well, lo and behold, this does exactly that. It makes a beautiful ABCD, pulls back. Now, my rule of thumb is that the low bar cannot be the high bar except in an instant restart. And occasionally there are rare instances, but the rule is never to do it. Well, the spike on the 4th of December from 74.50 to the round number 88 high was, in fact, a single leg up, but it wasn't. It was a continuation of the old move. So now we've got a brand new move that is either in leg G or leg B. I'm going to favor, just for the moment, leg B, because the stochastic's at 95% and the MACD is still strong. It should not fail from here. So here's my recommendation. And then the weekly, it's funny, I've got different people with different legs. Leg D is definitely, but you see, if you use, I don't know if you use this, Larry, but the 200 period moving exponential moving average is just a fabulous technique to add to your toolbox. If you look at the weekly chart, it says there's a chance that ugly candle of the week of the 27th of April of this year, from 105 round number high straight down to 81.56, that bar is going to be tackled going close to the top, but then the 200 period exponential moving average is at 102.44. So it might not get to the 105 round number, but I suspect it's so close that it's going to get real close to the 200 period moving average. Now, I don't know if I would not wait around for another 3 or maybe 4 points to find out, because if it spikes above that, it's all of a sudden it's turning everything into support. So I'm going to suggest to you, you don't have to do it right this very second, but just when we wrap up, sit back and say to yourself, look, I made a mistake. If this is a big part of my portfolio, I cannot afford to have capital depreciation in a time like this. This is when you want the most capital. They're going to be fantastic positions to put on in the next couple of weeks, both short and long. So I'm recommending take something off, and I would do it. I personally would do it right now, but I'm not telling you to do it. I'm saying sit back, look at your whole portfolio and say, what percentage is it? Am I not sleeping at night? If I'm not sleeping at night, you just got to get out the whole thing. You're good enough that you will make up your 7 or 8 or 9% loss over a couple of weeks or months even. But you're not good enough to make up a spike in Netflix if it suddenly jumps to the 110 area. That would just devastate you psychologically. So think about your position. You can always put it back on. I'm just suggesting, even my 120-minute chart says, not just yet, even though there's a rising wedge formation, it's about to tackle the top part of that. So you might not want to take the whole thing off, but you might just have increments. You take some off now, take a little bit if it goes a point higher. You decide. I'm just saying to you, you can always put it back. My reading is that it's walking. You've seen how it's walking the 9-period moving average in the daily with 92.11 support. So don't hang on too long. Think about what you want to do, but I would start scaling out to get cash, because you need cash to be able to get better positions, okay?
Okay, thank you.
Thank you so much for calling in. Let me know how it goes. We'll be back. We've got a caller. Oops, he just came off the phone. We want to talk about GE. GE is part of I want to look at, and I'll go through all these different stocks when we get back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Traditions Hour. This is Wednesday, the 19th. Oh, tonight at 7 o'clock at MIT over in Cambridge, there's the Boston Investors Group birthday meeting. It's the annual birthday meeting. And I'm guest speaker once again. I'm privileged to have that opportunity. It's in building E51, room 315, corner Amherst and Wadsworth. And starts at 7 with a little party. And if you want to bring something, that'll be great. And at the same time, at 8 o'clock, I'll be on and guest hosting. And you can just ask any questions you want. We're actually going to areas that I don't even have time for over here. So it's really a lot of fun. Great crowd, great questions, and always have a good time. So, let me see. We've got a Victor who was on the phone from Paramus, New Jersey. He couldn't hold on. He wanted GE. I'm going to go to GE next because GE has very often led the market up and led the market down, and very quietly in its own way. What it went from... Now, folks, this is the reason why I'm not emphasizing. I'm going to stress that the patterns that we look at right now are really covered beautifully in my CD introducing the ChapmanWave methodology. Look at this. GE goes to a low of 19.87 on the 16th of November. And what does it do? Remember, the premise is to identify the most important left side low bar. The entire bar, not the low, but the low bar. Once you do that, if there's a great candle pattern right away and the stochastic turns and goes from under 20%, it crosses positively and then goes over 20%, and the MACD turns up, you've got yourself a nice buy signal that can go to a buy mode as soon as the price and the MACD confirm. Well, what does it do? It goes to peak A on the 19th at 20.72, peak B at 21.20 on the 27th, peak C at 21.36 on the 28th of November, and then it pulls back, holds the 9-period moving average, that blue line, and it spirals up to 21.95, where? On 12-12-12, that beautiful day, 12-12-12, at 21.95, and it tries to make a new high, but it doesn't. It fails at exactly 21.95 for what I call, this is the drop bucket. It's tiny, but it's there, right there, the double top pattern, the pattern in my CD introducing the ChapmanWave methodology that I talk about. It is, let me just get this pointer there. It's the pattern that says, if the technicals are fading, and look, right here, look how the stochastic was turning down, and on the double top retest at 21.95 on the 17th, look where the stochastic was. Terrible failure. Kaplop. GE plummets down, it makes a low today of 21.10. What's the rule? The rule is if you go into at least a third to a half of the cup formation at the top, the inverted H pattern, like a backwards Y, it means that you're probably going to test the low. If you break the low, you can have a 1-to-1 pullback, and that's exactly what GE is doing right now. But more importantly is the weekly chart. I'm very concerned. It has the potential to make that pattern I call the dreaded H, that lowercase h. The week isn't finished. I'm not going to talk about it just yet. Friday in my show, if someone can remind me, we'll look at it again. Right now it says, be careful. It's about to pull back away from the inside track. This is something I talk about in my CD introducing the ChapmanWave methodology. The inside track is that tremendous support level when you draw two parallel lines in the lower channel trend line, above the lower channel trend line. And then at the top, if you can have a trend line or you can have a channel, but it has an inside track there as well. And that's usually the reversal point. So be careful. GE is saying, maybe there's just going to be a sudden bout of bad news somewhere along the line. And I want my subscribers to be prepared for it. To tell you the truth, I would have loved to have taken all the profits off today. Just said, that's it. Well, it turns out that some of the stocks are actually moving higher. But that wasn't the point. The point is that we're coming into very strong resistances. So let me go through. So, Victor, I would say if you are in GE, you better be careful. The stochastic is down at 80%. That's okay. And the MACD is only turning down the fast-moving average. But on price, if GE closes the week anywhere close to 20.71, it's at 21.15 right now, it's saying, whoa, be careful, because there's another trend line there that's really important. It's about to take it out. GE by Friday to Monday of next week, preferably Friday, but it could even be Tuesday. As long as it holds here above 21, if it's able to bounce back to 21.53, maybe there's some news, who knows, 21.53, I say, whew, for now, it saved the day. The monthly chart is walking the 9-period exponential moving average, trying to get to 23.63. That's been my very long-term target on GE, although we actually don't have any position in GE. I often do. I don't. And this is also a financial stock, so the financials, I'm moving away from what I want to do. Financials spiraled higher. This is either leg F or a brand new leg B. MACD's great, stochastics at 88%. I've been talking about the financials acting so well. They've pushed above the weekly 200-period exponential moving average. I love the look of this. And we've got the monthly in leg C. So the financials have kind of been leading the way very quietly. And there's tremendous support now between 1624, it's at 1659, the XLF, and 1612. That's the support area that needs to hold. Now, I said I will also look at a question, would I look at American Express, AXP? AXP is American Express. It made a low with a beautiful candle right there at 53.02 on the 15th of November. It spiraled higher to peak A at 56.55, pulls back under the 200-period moving average and the 9, then tries to close back, and it does. So it's a brand new little buy mode. It goes A, B. I knew it. I had to go through this carefully. I just knew that there was a leg D. Everything about it said D. Yes, something was being covered and I didn't see it. It made a peak D, just like GE has made a peak D. And that was right there in the candle of 58.35, the candle of 12.12.12. Now it's pulling back, and I'm watching it closely because it's held beautifully. But the stochastic and the MACD, although they're very good, says be careful, because if American Express and the weekly chart says the dreaded H, the lowercase h, the arch formation, and I already drew it in, it went a little higher, can very well make a second arch formation that turns into an M. And I'm pretty sure this is what's going to do. Tells me American Express, monthly chart, there's a possible peak F. It almost looks like the gold chart when it started to come down. So it says tremendous resistance at 59.40, between 59.40 and I'd say 59.30. 59.40 and 59.30. No, that's not right. And 59.73. I'm suspecting that it's in an arch formation and it's going to fail within the next 3 to 4 weeks, and then it's going to test the low bar of 54.16 made on the week of the 30th of November of this year. I'm watching it real closely. If for some reason, I don't care what the reason is, it spirals above peak deep, above 58.39, and can get anywhere into the candle of the 18th of October towards the 58.97 level, I'm going to say, wow, that is good action. It doesn't really change anything, but it is certainly on the shorter term good action. So that's a little heads up there. And the other question was HOT. I'll just do this real quickly because I really want to go to the airline index and some other indexes that very few people actually show or talk about that I know of. The HOT is the Starwood. Now, I don't know if any of you have tried to get into restaurant with all the talk of the fiscal cliff, try to get into a restaurant, try to find parking in a mall lately, or try to get accommodation. Let me tell you something. The prices and the malls are full. The prices of the hotels are skyrocketing. So HOT is the symbol, HOT, trading at 56.52, Starwood Hotels. I've got this in a new leg F/A, with the MACD and stochastic still very strong, trying to tackle the left side high of 57.86. So it's within a point of making some kind of short-term top with a test. The weekly chart has these U-shaped patterns, and so far the technicals are saying, yeah, okay. It's the monthly chart that's making that asymmetrical pattern, one that I dislike intensely, because what happens is the price sneaks above, and you say, oh, great, this could be a breakout to the upside, and all that happens is just sneaks above, comes back in again. But it will decisively break out if we can go to 62. It's at 56.54. That's 6 points higher. I'm not even talking about the monthly right now. Monthly technicals are not very good. My eye says that this is going to be in a trading range a little longer until it decisively cracks 62. It makes 62 a level of bumping up against day after day, trying to break out. Or if it closes underneath 50, let's call it underneath 50. Right now it's at 56, 53, 6 points. So 6 points either way. All I can say is if you're long, stay long and raise your stop. I don't see anything negative right on the very short term. I probably will by Friday or Monday. So that's the story there. And this is not a short at this particular time. My eye tells me that there are going to be a lot of shorts coming up in early January, but not right now. So that's that. Okay, here we go. Dollar XAL. Now, I haven't spoken about this for ages. The XAL is at 44.30. This is the ARIA, the ARCA Airline Index. It made a great move from the low of 12.62 in March of 2009, peak A, B, C. How many times are you going to see these peaks going to D and then have a sharp pullback? Remember the song that I almost sang? I mean, that I did sing, but not quite singing. Croaking is the word. 12.62 was the low, and you know what? A beautiful doji candle high bar in November of 2010 at 50.66. Then it pulls back to a trough C on the way down, lowercase letters and troughs we look at, and it goes to a low of 27.48, October of 2011, and then it goes peak A, 41.69, 89, February of this year, pulls back, holds the 9-period moving average, and pop, it breaks to the upside in a new leg. I'm calling it a new leg B. What will happen is if it breaks about 50.66, I'll have to call it E/whatever the letter is. But it really looks like it's trying to head toward, it's a long way to go, toward the 57 200 period moving average over a period of months. But that's only if you can see from this pattern right here, that's only if it can hold, I would say, the lows around about 36 to 35. That's very far. I'm talking monthly. That's why the prices are so big. On a short term, the weekly chart has got, this is what I call the instant restart. This is what I call the restart pattern in the Chapman wave. Beautiful example if you want to print this out. Beautiful set of restarts. Has a fabulous move from the low of 27.48 in October of 2011, but it only goes to a peak B. Then it pulls back, and it tries to make another run for it. 34.72A goes to June of 2012. 38.61 pulls back. Then B is week of the 22nd of June 2012 at 40.09, pulls back, goes to a C, and then pulls back and restarts and starts a brand new peak, A, B, C, D. Very tight. What's the rule in the Chapman wave? The quicker you go from peak A to D, the quicker you can expect a pullback. Not a crash, just a pullback. And it's usually kind of positive. It just needs a breather because it's like when I was a sprinter. You get it over with real quickly. So now look what happens. It goes peak A, B, and I'm calling this C. I'm calling this brand new C, and my target is the high bar of 45.20 made in May of 2011. Left side, right side, price time action. It should make it between now and the week of the 11th of January 2013. So this is great. And now look at the daily. Daily's unbelievable. Lower oil prices, of course, help. I haven't finished this chart. I had it on my black charts. For some reason, it's not there anymore. So this is peak A, B, C, fails, goes to D, and goes to E, F. Brand new. A, B, C, D. A, B, C, D. Yeah, this is whatever it is right now. I'm not going to take the time just to do this. I'll do the notation for tomorrow, but I haven't got it now. The MACD is at very strong, and the stochastic is at 94.51. That is very, very good. I think that the airline index can go a little further. That's the reason I'm trying my very best to keep our long positions, although we're all over the show in the sectors, just high tech, rentals, tires, alcohol, spirits, the scientific instruments. I mean, you're all over the show. But those are the stocks and charts that I like very much. So I wanted to cover that, and at the same time, I want to talk about the IYT. Look at the IYT, making a powerful leg up. Of course, it's helped by the rails, and it's helped by the technicals of the airline index. But everything about, there's this pattern that I spoke about, the asymmetric triangle. It's asymmetric just means you're making a sideways wedge pattern, and the angle down and the angle up are really close. That's all it means. It sounds kind of fancy, and it is kind of fancy, but that's all it means. And it means that normally the rule of thumb is usually that if you break to the upside, it'll go all the way to the top. That's not the way I look at it at all. It just means that it's probably going to go to the previous peak on the left. It could go to the highs, but it could also fail. It's actually a trend line. I'm not a great fan of these very long-term downtrend lines or uptrend lines because they can mess you around. You can go under it and then close above it in the same bar. It's a monthly bar. So who knows, by the end of the month, we could be back underneath it. But look at the way the support is out. I do respect the way it reverses at that point, not the way it breaks down or breaks out, and it's held beautifully. So the airline index, the IYT, that's the iShares of the Dow Jones Transportation Average, is acting very, very well. So that's what I want to look at, and I'll be back straight off these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern. on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. I'm showing here in the Tiger TV, and these are shows are archived. You'll be able to see them in archive in Channel 11. You can see the cup symmetry. How the mirror image of the left side to the right side gives beautiful projections. Well, if you look at that and you look at this right here, you see that inside there? See this trend line? Right from that low into that bar right there. Left side, right side price time match occurs over and over. Look at this huge one. This is the New York Stock Exchange. So this is a pattern I'm studying real closely, the handle and cup pattern. Doing a lot of work on this. What happens and how it happens. And now what's very important, look at these scallops, look at these cups that have formed. It's just consistent. And now the MACD is still very strong and the stochastics at 87%. This is a New York Stock Exchange. It's going to leg D, walking the 9-period moving average. And now let's use, remember all the techniques that I was talking about, the left side, right side, price, time match, and what it means, and the ChapmanWave inside wedge target line. Well, look at this. In the New York Stock Exchange weekly chart, you see that blue line? Look how beautifully it's controlled. It's gone above it for the buy mode, under it for the sell mode, up above for the buy mode. And now there's a beautiful candle. Look at this strong candle, still leg A. It's gone above 85.15 today. It's at the high is 85.19. So is this now old leg E continuing? The old buy mode, and it'll only go to an E, maybe an F, and then tank? Or is this a brand new A? I won't know for a little while until the week's finished, and then I'd even like to see next week. But here's the pattern that we were looking at, how it breaks out of channels. You see, this is the inside wedge. It's broken above it, but consistently for 4 months it's been above it. That is way more important than the actual pattern. It's saying that this is now leg C up in a brand new buy mode in the monthly chart. At least that's what I'm calling it. But it's a buy mode underneath the previous 87.18 underneath the 87 high, the 87.18.25 high. So this New York Stock Exchange is way underperforming from the major high that it made in 2007, but lately it's been acting really well. It's one of the better indicators. And now I had a quick question. So the New York Stock Exchange, if it closes under 81.20 in the next 6 weeks, that's going to be very poor. The IWM, look at this. Leg D goes to peak D. What's the rule of the ChapmanWave? To get you from the buy signal, left side, right side price match, if there is one, big arch formation, to A, B, C. But as you remember, yesterday I was talking to someone and I said, I'm calling this phantom. I'm making these all gray because the reality is it's officially only in leg C to the upside. A number of questions about that. My technique allows to be a little conservative, and the parallel highs that were made at 82.41 on the 29th of November, and the 30th of November at the same price, and then the breakout to 82.76. It says you can make that. Everything about it said it should have been a peak, but it wasn't. So to be conservative, it says from here, be a little bit careful. That's all. Officially, it is leg C, peak C if there's no new high bar today. But the technicals are still very strong. There could be a leg D, and then everything goes back into blue color, and it goes to a D. But this is where I'm a little bit careful. I'm a little bit careful in all the indices right now because the Dow's making leg F to the upside. Could be a brand new B, but I'm calling it F for the moment. The S&P, $S. So, folks, stay tuned for Larry Pesavento coming up. Should be a fabulous show with Larry, as always. Just love listening to Larry. Just has wonderful techniques, wonderful explanations, and should be a great show. And, of course, all the other shows going on for the rest of the day. There's a left side, right side price time match in the daily, which is broken to the upside. That says support for the S&P very strong between 428 to 422 over the next week. But if the upside goes to the 1448 to 1452 area, the candle of the 18th of October, 1464 would be a target. Hope to see a lot of you tonight at MIT for the investors group discussion, and I'll be back tomorrow.